Hello, I'm Jonathan Moyes, Head of Investment Research at Wealth Club, and today I'm with Amelia Armour of Amadeus Capital Partners to talk about the Amadeus Early Stage EIS Fund. Hello, Amelia. Welcome back to the studio. So we're here to talk about the EIS Fund. What does it aim to do for investors?
Yeah, so our EIS fund allows investors to get access to the most cutting edge, deep technology companies based in the UK. Amadeus has been around for 27 years. We've got lots of experience. Our fund was started by Hermann, Hauser and Anne Glover. They're still very active with our firm, and we've invested in over 190 companies in that time.
I guess unusually, perhaps, for EIS funds, actually, you're far more focused on managing institutional capital rather than EIS funds, and EIS is actually a very small part of the overall business. So maybe could you give us a bit of a flavour of the wider Amadeus business and how much capital you run and where you typically run it?
Yeah, definitely. So we raise large institutional funds, and over the life of Amadeus, we've raised over 1.3 billion of funds. And our EIS fund tends to co-invest alongside our main funds. And the EIS fund then gets the benefit of the much larger stake, which is held by the main fund. The main fund will often have a director seat. So one of me or one of my partners will sit on the board of the company. And then the EIS fund we bring in normally into second or third funding rounds of the company because we can take up our preemption rights, which our main fund hasn't taken up.
Oh, very good. And your role at Amadeus?
So I'm a partner at Amadeus. I've been with Amadeus for 16 years. We have offices in Cambridge, London and Oxford, and I spend a lot of my time within the Cambridge ecosystem. And I'm a big supporter of companies which are spinning out of the university there. So a number of my investments have been with Cambridge Enterprise and other Cambridge individuals and really trying to support that ecosystem.
Oh, good. And so turning back to the EIS fund, where does it typically invest? At what stage are you investing? Are there any particular sectors?
Yes. So we're an early stage investor. So sometimes it's just three people, a great piece of intellectual property which they might have developed, and we're funding them to really get that to a product. And the EIS fund invests maybe in the second or third funding round, but in companies that are across the sectors of AI and machine learning, cybersecurity, quantum computing is a big investment area for us. We're really interested in photonics, so the use of light to either compute or move data around, and then also novel materials and digital health and medtech.
Oh, very good. And so do you have any recent examples? You've always got some good examples up your sleeve.
Yeah, so a couple of companies that are worth mentioning. One that's at the scale-up stage is a company called PolyAI. So that started as three founders from Professor Steve Young's lab in Cambridge from the engineering department there. And PolyAI are building superhuman customer agents so that you can automate calls between customers and the businesses that they want to speak to. So they have enterprises like Whitbread, Metro Bank, quite a few casinos in the US who they're working with to automate the calls really successfully so that you don't get frustrated when you're dealing with an AI agent, but getting to a successful outcome of either a booking or a request for information that you might have. And they started this three-person team. They've now scaled up. They've got more than 80% of their revenue comes from the US. The tech team is based here in the UK, and they've really scaled their sales in the US. So really successful company in our portfolio, which we invested from the EIS fund back in 2019, and it's been growing along the way, which is great. Last year, it raised a funding round from a group called Head of Sophia, which is great to have them involved. It's also raised money from US investors and Canadian investors. So it's a really sort of global supportive investor group that it has.
Any other examples?
Yes, another one worth commenting on is on the novel materials side is a company called Xampla. Again, it comes from Cambridge, from Professor Thomas Knowles's lab there. And Xampla have developed a plant-based replacement for single-use plastics. And it's just an amazing product because it's the same performance as the oil-based alternatives for plastic. It has cost parity, and amazingly, it's just a drop-in solution to the existing manufacturing processes, so really easy for customers to pull through and deploy. And so they're now scaling, building up their sales, building up the volumes of their product that they're producing, but all started in Cambridge and now in Europe, moving into Asia. Really exciting company that is replacing these single-use plastics, especially ones that you see in takeout boxes. So when you order a curry or a takeout, then you get these cardboard boxes that are all lined with plastic to stop leakage. And those are all oil-based, which means none of those cardboards can be recycled. Whereas when you use Xampla's products, you get the same performance, but you also get the recyclability as well.
I guess you were quite early in backing Xampla, so you're quite comfortable backing some of these companies at a really quite early stage.
That's right. It's obviously at that point you're taking quite high risk because it's a very early stage investment. But what we really look for is, really outstanding team, some great technology which is really disruptive, i.e. it's going to replace something in the market like Xampla, or it's going to have a significant change to the cost of that product. Is it going to be 10 times cheaper than what is existing already? So something that's going to mean that it's adopted by the market. And then the big thing is that we're investing in companies that are going to sell their products in a global market. So we have to be able to see how these companies, if they do well, are going to scale into lots of different markets and grow really big businesses, which we can start as the early investor here in the UK, bring in more investment, but scale these businesses here, which is super exciting.
And so, Amelia, some good company examples there, but I guess part of the challenge is A, you've got to find those companies, and B, you've then got to win those deals. So how do you go about finding those companies and then convincing a founder to take your money, essentially?
Yeah, so we'll invest UK-wide, but we have team members in Oxford, London and Cambridge. So we make a lot of effort to see the companies that are coming out of the universities in those places. A lot of our high-quality deal flow comes through recommendations in our network. So through other founders who have friends or people they know that are starting companies, or maybe people that they have trained with at some point. And then we use a couple of venture partners to help us as well bring in deal flow. So these are people who are very experienced in their field, in particular sectors, so in quantum computing, in photonics, in AI, and they will bring in really high quality deal flow for us as well. Because it's not just seeing a number of deals, it's really seeing the best deals in the UK that we want to get access to. And so having these wide networks and then going to deep tech accelerators and places like that to see the new companies coming through. We make a lot of effort to spend time there.
And we've had some rule changes recently with EIS limits doubling the amount that you can invest in these companies. Does that change how you invest at all? Has it widened your investable universe?
It's really exciting for our scale-up companies because they were getting tapped out by the amount of EIS investment they could take, which meant they then had to look overseas or elsewhere for further funding. And so this change in the increase in the limits means that more UK investors will be able to invest in our scale-up companies, which is great for, getting companies funded by UK investors and also allowing our portfolio companies to take more investment from the EIS funds that are already on the cap table.
Oh, very good. So there might be some companies in your existing portfolio that previously had been tapped out, but maybe now they could take some more funding.
Yeah, and that would be super exciting for them. And it works really well on both sides, for the investors and for the company. So really positive rule change.
And I guess the ultimate goal is to create some exits. I believe you had one exit recently.
Yeah, a company called Ravelin I can tell you about. So that's in the fraud prevention space. So the founders there, a guy called Martin Sweeney was the CEO, had seen this problem in a previous company where when merchants are accepting payments online where the credit card isn't physically present, that there can be fraud at that point. And so Ravelin developed behavioral technologies and using AI to detect when a fraudulent credit card was being used. And so then if you're the merchant, you can then decline to take that payment and obviously not send out the goods. And so preventing fraudulent transactions. So again, successful company has grown here in the UK, and it was sold to WorldPay, which is a global payments platform, in February of this year, so 2025. And the EIS fund had originally invested in 2000, so got a nice exit over that 5-year period.
Okay, so turning to, I guess, the risks with this fund. You're investing at an earlier stage. It's fairly heavy on deep tech. Does that mean you need a longer time horizon? What are the key risks with your EIS fund?
That's right. It is investing very early. So you're taking risk on the stage of the business. There isn't revenue normally at the point that we're investing. But on the flip side of that, you then have the potential for very high returns if the companies do well. And the ones that I've mentioned, have all grown successfully. It may take a bit longer to get to first revenue for deep tech companies, but the data shows that once they start generating revenue, then they accelerate very, very quickly. But there may be more development of the product during those first initial years. And so revenue can be slow to come through, but then when it does, it really takes off.
Okay. And so summing up everything we've just discussed, Amelia, for those that want to back an EIS fund this year, why should they back the Amadeus EIS fund?
Is if they want access to really the most cutting edge companies in the UK, then they can do that through our fund, through our network, which is past founders, through connections with the university, through connections to people who are coming out of more developed startups. We're really seeing the highest quality deal flow of disruptive technologies where you've got a huge amount of IP and know-how behind what they're doing, so that we can make really significant differences to people's lives, not just in the UK, but globally from the technology that we're bringing to market.
It's Amelia Armour of Amadeus Capital Partners. Thank you very much.
Thank you.
If you're watching on YouTube, please press like and subscribe to the channel for more.